All right. We are now live for another Daily Rates Live with the Mortgage Calculator. We'll give everybody a few minutes to get connected before we get started with today's show. Today is January 23rd, and it is 11 a.m., and that means that the rates are out on all of our different programs. So today we're going to take a few minutes to go through all the different basic scenarios for some rates for this morning. And then as you see here on our main graphic, we'll have a deep dive into our fix and flip investor loans, a very popular request, and also a lot of misconceptions about these types of programs. So we want to make sure we can give a detailed example of how these exactly work. So looks like we're live on most of the platforms now. Let me go ahead and do the official introduction, and then we'll get started. So welcome everyone. My name is Nick Hiersche. I am the president and founder of the Mortgage Calculator. We are a lender that specializes in alternative documentation programs, as well as conventional FHA, VA, USDA, all the regular programs as well. And we are licensed in 17 different states for primary and secondary homes. And we also love to do our alternative products, such as our DSCR and business purpose loans in about 30 different states as well. So we can do almost every state for business purpose and 17 states for conventional primary and secondary financing. And we have over 350 loan officers on our team that are there to help out anybody that might need some of these programs. So today I am joined by our sales manager, Jose Gonzalez, with 27 years of experience. He's going to go into a detailed analysis on some of our programs here in a minute. And also Kyle Hiersche, our COO, will explain how to connect with our team members. So for today's show, again, today is January the 23rd, 2023, and it is just after 11 a.m. So our rates are live now for all of our programs. But today's topic and our deep dive here in a little bit is going to be on our fix and flip investor loans. So these are very popular programs. As I mentioned before, a lot of misconceptions about the different ins and outs. So we'll have Jose go into a detailed explanation on how our team works for a typical fix and flip investor scenario and can explain some of the ins and outs of the program. So we'll go into a deep dive on that later. That is not a product that we can price on our instant pricer that we do on our show. So that's where Jose will come in with his deep dive here in a minute. So now that we are live and the rates are out, let me go ahead and switch over to our pricing engine and bring that up. So this is a tool for mortgage professionals. This is a tool for our team to check out the pricing for today. So this is not something that's available to the public, but it does give us a chance to check out the rates that are just issued just this morning, so we can check out what's going on in the marketplace. So if you'd like a detailed quote, please get with one of our licensed loan officers. They can go through here and price it and actually send a full detailed quote with all of the costs and fees and APRs and all that good stuff. But for this morning, we're going to check out some of our general pricing so we can just see where the market's at. So for all of our examples this morning, we're going to do a standard 80 LTV scenario. That means 80% loan, 20% down payment, typical scenario. Loan amount here will keep the same always. We're going to run through conforming first to check out what our standard conventional rates are. Then we'll run through an FHA example, typically the next option if a customer does not qualify for a conforming. And then VA and USDA are specialty, so we won't go through those today. VA is only for our veterans that qualify. So if you do, please get with our team. They'll quote this up in about 5 minutes, and we appreciate your service as always. USDA is only for rural property. So if you're looking in a certain area that is eligible, please let us know. We'll quote this up in just a few minutes as well. But today we'll go conforming, FHA, and then we'll break into our expanded guidelines, aka our non-QM programs that we here at the Mortgage Calculator love to do. And we'll show some different examples. So first example today, conforming, conventional, purchase, 30-year fixed, standard rates. We'll go primary, single family, 1 unit, and Florida, Miami-Dade we'll use for all our examples. That's where our office is based. And our estimated FICO score will be 760 for all these scenarios. And our estimated debt to income ratio will be 40 for all these scenarios. Of course, U.S. citizenship, pretty standard scenario. Let's check out what our rates are this morning. Obviously, this is a live tool, so let me get through my security check. Those are the bridges. That's a tunnel, I hope. Let's see. right. So these programs do pop up. These Home Ready and Home Possible programs are specialty for our borrowers that do qualify. So let's cruise down to our standard that anybody can qualify for. This looks like our first standard conforming 30-year fixed option. And the rates have gone up a little bit since last week, just a touch. We were just under 6 for about 1 discount point. Right now, we're at 6.125 for just under 1 discount point on the standard option here. So rates fluctuate every day. That's why we love to do this show. They went up a little bit in the last couple of days, but fortunately, they've been on a general downward trend for the recent couple weeks. So this is a good thing. Now, let's go check out our FHA options this morning. So if we pull this back to the same scenario, 80 LTV, same desired price, 1 discount point of buy down. And if a customer does not qualify for conforming, typically the next best option is FHA, where we get a little bit more expanded guidelines on some DTI and some other things that allow us to qualify more customers, typically for FHA. Everything else will keep the exact same, and pull up this scenario. So looks like our top scenario here for 30-year fixed FHA, 5.5 rate for just under 1 discount point there. That's what the computer came up with, the best combo. And one thing to pay attention to on FHA, there are some additional fees for monthly mortgage insurance. So there is an additional APR hit there. So to compare that to conventional, always check out the APR, as we always mention. And those are great options for our borrowers who do not qualify for conventional and maybe are only left with this option. Still great rates, still great options. Now, where our team comes in at the Mortgage Calculator, where some other lenders may not be able to assist, is when a customer doesn't qualify for conforming or FHA, they may be out of gas. So a lot of banks and other lenders don't have non-QM programs to go beyond these guidelines that we have here. Of course, if a customer qualifies for FHA or USDA, that may be an option. But typically, conforming or FHA are the best. And then if you don't have any non-QM programs, you're stuck there. So that's where our team comes in. If you don't qualify for conforming or FHA, we can go with expanded and use alternative income documentation. So we'll pull up the same scenario, 30-year fix, primary, single family, everything else staying the same. But now you see in our non-QM programs, we have alternative income we can use. So full doc is full tax return that we're used to on conventional FHA. But now we can go 1-year alt doc, 2-year alt doc. We can do asset programs, which we went through a couple examples last week if you want to check out those shows. We also have our business bank statement options, investor options. These are only for investment properties, but we'll show these here in a second for our DSCR. And our most popular option are typically our personal bank statements for 12 months. Typically, the reason a customer may not qualify for conventional but may qualify under our non-QM is because they're a self-employed borrower. So we'll mark self-employed here. They must be self-employed. And then instead of using their full tax return documentation, we will grab their last 12 personal bank statements in order to determine their debt to income ratio in their qualification. So a lot of times people may not appear to qualify with their tax returns, but if we look at their bank statement income, we can determine that they actually do make a significant income, and we can then qualify them with those options. So this is a typical scenario for a non-QM primary purchase, 80 LTV. Obviously, the rates are going to be higher here in this example, but we do have a lot of great options, and they do vary widely since these are non-standard programs, non-QM. All of these hundreds of programs that we have vary widely, as you can see in rate and cost, but also in eligibility. So, for example, some of these programs would allow a borrower with a recent foreclosure or a recent bankruptcy and some other credit events and some other leniency factors. So our best program right here looks like about 7% rate for 1 discount point. That's amazing. A couple other options around 8s for around 1 discount point. So please get with our team members. They can navigate all these very specific bank statement programs to find the best option for you or your borrower. So a ton of different options here, very specific to each deal. Please get with our team. But this would allow a customer who would otherwise not qualify to still get the home of their dreams. So we love to offer these programs, which really open people's eyes. Now, let's switch gears before we pass it over to Jose. A lot of our requests here at the Mortgage Calculator are for investment properties. So let's check out some investment property purchase options. We'll do the same scenario, 80 LTV, 20% loan. We'll still do a 1 discount point in buy down requests. And our options here will be conforming or expanded non-QM. There are no FHA, VA, USDA for investment properties, non-owner occupied. So very quickly, we can take our options here for a conforming purchase and compare it to our non-QM options. So for conforming conventional loans, investment properties do have a significant cost hit recently from the GSEs. So you'll see here, although we requested 1 discount point, the lowest discount point options we have is about 3 discount points. That's from some penalties they've basically assessed to these investment properties to discourage borrowers from refinancing or purchasing investment properties under these programs. So still great rates, but you see high discount points here. So these are our conforming examples. Obviously, if a borrower qualifies, that's great, but there are no, 1 discount point options here. So a lot of times, especially in this rate environment, we see that the GSEs, the Fannie and Freddie, have discouraged investment properties, while we love our non-QM options because we are encouraged to purchase investment properties under non-QM. So we have some great alternative documentation options under these programs. So we'll pull up the same scenario, ADLTV. This time we'll hit the expanded guidelines, aka non-QM, and we'll see that we can not only edit the verification here and this DSCR options open, we can still do all these other options, the bank statements, the asset related, but the best option that encourages rental properties, basically our DSCR option, where we use the debt service coverage ratio, which is just the rent of the subject property, the investment property that's being purchased in this case, in order to cover the expenses, the PITIA for that mortgage. So we also have a prepayment penalty here, which is standard on our non-QM programs. We typically do 3 years. Obviously, we can do 0 with a cost to have 0. And if you want to do 5 years, if you're going to hold the property forever, we can obviously reduce the cost a little bit, but we're always going to pick 3 years for our standard scenario. And let's check out what our non-QM options are here for a typical purchase. So you see the rates are a little bit higher than the conventional, but what's important for our investors is keeping money in their pocket. So they're able to not have a large amount of discount points and offset that with a no income documentation, no employment verification loan, which allows them to quickly purchase more investment properties or refinance investment properties to then, of course, purchase more investment properties. So a ton of different DSCR options here, dozens and dozens of programs for our team to navigate through. So please get with our team. They can find out which one is best. For example, some of these at the lower rates might be pretty standard for a property that cash flows a lot, but we also have options for short-term rentals and stuff. So you might see some higher rate options for ones that do allow us to use short-term rental income. So a lot of these programs do vary widely. Please get with our team to check them out. And that's basically it for our live pricing here. But we do also get a ton of requests for other programs. So real quick, let me pull up my slide. And today we're going to go over some examples for fix and flip. So a lot of investors love the DSCR product that we just explained to purchase basically rent-ready properties, whether they're currently rented or vacant and they're ready to rent. That's amazing. The DSCR is a great option. But what do you do when you have want to purchase a property that needs some work, right? So fix and flip, super popular product and very confusing. So there are a lot of different ins and outs to a fix and flip investor loan. Obviously, we want to help all of our clients and investors out there get into whatever suits their fit, right? So if they want to take on a project, obviously we can't do the DSCR financing yet. So we'll assist with a fix and flip. And then typically after the rehab is finished, we'll take them into a term, 30-year fixed DSCR loan for them to hold that property long term if they're going to hold it. But this example here, I'm going to let Jose take over. We'll go through a detailed example on an actual fix and flip, and we're not going to be focused on the long-term financing after. This is just going to be get into a property and get the rehab budget and get the project rolling. So I'll go ahead and let you take over, Jose.
Good morning, everybody. Thank you for joining us for the Mortgage Calculator Daily Mortgage Rates. This is another mind blower loan type that we have here, because in this loan type, you can actually borrow more than 100%, ideally, of what you're paying for the property. We have a very interesting scenario today where we are doing a fix and flip quote for an 85% purchase. right? So our scenario is we have a purchase price of $400,000, and we have a rehab budget of $100,000, and we have an after repaired value, also known as the ARV, and this is the critical component. This is the one that shows if this deal has any meat on the bones, right? We have an ARV of $700,000. So this investor is getting a pretty good deal. This property also has an as-is value of $400,000. We usually set the as-is value as the purchase price. So in this scenario here, also, our borrower has an 800 credit score, and he has 5 flips in the past 3 years. That's very critical information there, because in these fix and flip or fix and hold, I mean, they're all either you're going to fix it to keep it or you're going to fix it to sell it. In these types of loans, really, and this is the mind blower, your income means nothing. You know, what you make in your tax returns, all that kind of stuff. I mean, great. What if you're a doctor and you're making $300,000, $400,000 a year, but you have no experience, zero experience in a fix and flip loan? That is definitely going to impact how much they're going to lend you of the whole. That's going to impact the percentage that you're going to get of the rehab budget and everything else. So in our scenario, our borrower with 5 flips in the past 3 years is a good risk for this program. So in our scenario, after we ran it through all the different variables that the system considers, it came back with a loan amount of, now mind you, our purchase price is $400,000, right? And we're getting a loan amount of $440,000, right? So that's $340,000 for the actual purchase. That's based on the purchase price, the as-is value. So we're getting a $340,000 purchase loan. That's the purchase part of the transaction. And they are financing 100% of our rehab. So no need to put it on credit cards, no need to put it on a HELOC or anywhere else, no need to do anything other than just have the deal fund itself. So we're getting 100% of the rehab and $340,000 for the purchase. Now, there are down payment and closing costs to consider. So this is not the full list of the closing costs. This just takes into consideration lender fees. But we're talking about $77,990 total. So that's $60,000 for the down payment and $17,990 for the other expenses. And then they require a liquidity buffer. That's like a little bit of reserves that you have to show of 1.5% of the loan amount. Now, remember, these figures could all change if my borrower has either a lower credit score. This particular borrower has an 800 credit score, combined with less experience, right? And also note here that the 12 months of interest, which is the debt service, $36,112, is also a prepaid expense at closing. So total cash outlay for this deal, $120,702. Mind you, that's already, you've paid the loan for 12 months. You have a little bit of reserve in there. That's your down payment, and they are financing all of the rehab. So this is an amazing deal for your flippers that get those nice juicy deals. They come to see you, and you can give them great news like this. So very, very good option. Now, the costs do include, in this scenario, I guess it's all borrower paid. There are no fixed flip deals that have any lender paid compensation. But due to the fact that we are getting 100% of the rehab covered and a high LTV, that never stops any of the investors from benefiting on these deals.
All right, perfect.
Thank you, sir. So let me pass it over to Kyle, who can just explain a little bit more how to get with our team and get your own fix and flip quote or any quote in just a couple minutes.
Yeah, absolutely. So thank you everyone for tuning in. We have over 375 loan officers from all across the country. As Nick mentioned in the beginning, we are licensed in 17 states, and we can do fix and flip loans in most states, as well as the other non-QM loans like the DSCR business purpose loans. So we have loan officers out there to help you with whatever you need. If you're already working with one of our loan officers or they shared this video with you, great. They can get you a quote for your specific scenarios in just a few minutes, just like the quote that Jose showed. We can quote any DSCR or conventional bank statement, any of those type of loans within a few minutes. If you're not working with one of our loan officers already, please visit our website. It's right there, actually, themortgagecalculator.com, or you can send us an email, info@themortgagecalculator.com. We do these videos every single weekday at 11 a.m. Eastern time. We will go through the rates. So we hope to see you all tomorrow at 11 a.m. Eastern time to go through this again. Thank you everybody for tuning in. We appreciate it, and we'll see you tomorrow.